days where you have both directions are open to be taken. And sometimes you get the one, and I much prefer those days, because sometimes what can happen is when it's straddling short or long, which I personally want to trade. And the reason I do that for is because I like to trail, and I really want to trail in a direction that the trend is currently on, and that's where the money is going to be made. For me, anyhow. Every trader's different. So this trade is nice. It moves, 8:35 is the entry time. There was no swings to work around. Straight to target. Hardly any heat whatsoever. So this is great. It's a nice scale out, right? Quickly bank 21 pips. Come around. 1 pip profit on the second part of my position. As you know, I like to trail. I had some hope here, but I didn't deviate from the plan. It was what it was, and I took 21 partial and 1 partial. Here, like I said, I had the bias. I could go either or. Look what happens here is at 111.78. It's a valid trade. Even if you're just trading out of the box HVMM, it's a good setup, right? Quickly, you kind of get taken in this trade. Now watch what's going to happen. It's going to come up. Right, my stops here, bumped up around the profit line. Right, use the indicators. Work around the indicators for your profit. For your stops. If you can work around a current swing, like a swing level. If you can work around the profit line, the directional, do it. Round numbers. If it's not too much of a stretch, just do that. In the end, it can save you a lot of heartache. So what happens here? I'm going to show you. We come up. Market comes up. Now look at the level we're heading up to. We're heading up to the 112 level. 112.00. Key level. Right? Key level. There's going to be a lot of interest in not letting that break. And of course, there'll probably be the interest to make it break. So, there's going to be a bit of a battle there. Right? So what happens is the market comes up, comes back down, forms the exact same kind of candle. The low on this candle is 72. Low on this candle is 72, right? Double bottom, perfect double bottom, right? What I did, this blue line here, is I moved my stop around to the last swing level. Now, why did I do that when I didn't get down to a trade management area? Never forget that there's that art of trading, right? When you see double bottoms forming up in these kind of candles, these are reversal type candles. Do I really want to, stick to my strategy and without any art whatsoever? Well, no, because I'm going to see what would have happened. I got taken out for more than what I eventually do lose. So this is what I want to show. When you saw this on the earlier chart, the euro yen, I showed you where it was spiking down in that big 4. And then we have this big loser, right? 17 pip loser, full position loser as well for a minus 36. And then plus 9 on the last trade times 8 for plus 72. So you would end up the day about $408 minus spread cost, of course. I also want to point out that if this didn't get stopped out in this area right here, I would have just taken off my full profit here, just because we're getting late into the session. All right, and you don't know how long these trails are going to last, and I don't want to be stuck in front of the keyboard all day. And if I was in a trail starting over here or over here in this area right here, like I was in the pound US, different ball game. You're not going to cut yourself off the knees. But in this is a little bit different, and you know what? This would have brought up some pretty decent pips. 57, 50. There's a swing level there, so 52 roughly. I know there's a key level of 50, but you're also 56. Yeah, you could be around here. Then you've got some profit to play with. So 50. Let's say 50. So another 42 pip winner right there. So it'll be 42 plus 21. On this, I'm trying to figure out why I got an extra 4 pips on this. It's quite possible I Let's go back and take a look. I might have put in a different entry price or exit price, 112.06. Interesting. I'll check that out. Anyhow, so that's that. So what would I like people to take from this video? This, if I could hone it down into one thing, this kind of price action here. When you get triggered into a trade, pop back out, comes back down, basically the same area. There's a chart pattern there called double bottom, right? If it happens up here, it's a double top. Look in your trade plan, and are you going to want to cut risk at this? Are you going to want to use a swing level like this one right here? The logic behind it, there's a lot of it. Can you back test this? Well, I guess you could, but I don't know how you're going to back test that. I guess you could go, or maybe just forward test it when you're trading. Trade the normal way, and then forward test what would happen if you did this. I'm going to do it regardless. To be quite honest with you, it's not something I spent a whole lot of time testing. It's a chart pattern. It's basically hitting a double bottom and breaking above a swing level, putting a higher swing high on a short, which tells me that the move down is over for that particular time. Okay, and then we get into a triple bottom area right here. These are zones. Doesn't have to be exact. Yeah, pop through a few pips. Doesn't matter. They're zones. And let's just take a quick look here. Let's just see if we can draw that line. Just one more thing here. Let's just put this here. You see what's happened in this area here? Market came down, popped up, didn't break above, back down, up, kind of popped through here. So it was kind of hugging this area, right? This 111.70 area. So all in all, good move. Cost me, saved me some money in the loss department. Anyways, this video is going to be dragging. So that's that. Hope you guys have enjoyed these trading videos, and we'll talk soon.